Calculate the total fees and investors' net return for all 3 years there. Now, what we need to do, we need to first of all compute the management fees. So we are saying the management fees will be 2% and 20%. This is management fee, incentive fee. What are we saying? This is the value of the hedge fund. We're saying the value of the hedge fund is 100 million. If the fund grows from 100 million to maybe say 200 million, so it becomes that size, 200 million, at the beginning, there is going to be 2% of this value that will be charged. 2% of 100 million, I'm assuming, is going to be 2 million. And then based on incentive, this is a motivator to the portfolio manager right over here that motivates them to actually work harder. Now the fund has grown from 100 million, just for example, if it grows from 100 million to 200 million like that, then we will be able to charge a 20% incentive fee as something to motivate. So the difference is 100, so it's 200 million minus 100 million like that, and then you charge 20% like that. So 20% of that difference over there of 100 million is what we're saying is incentive fees there. So let's begin by looking at the first year. So we have year 1 there. We first of all need to compute the management fee, and we're being told management fee, we are being told the management fee at the beginning is just 2% multiplied by 100 million. That looks like 2 million, like I had said, is 2 million. So you can put 2M like that. Once you've computed the management fee, now we need to compute the incentive fee, and you're being told 20%, this is 20%, this is 2% like that. So we have been given the ending value there. So we need to get the difference between the ending value and the beginning value right there. So we are saying 20%, so it's going to be 20% multiplied by the beginning, the ending value. The ending value you've been given there in the question for year 1 is 125.75 minus the beginning value was the 100 million like that. Then we also need to less this management fee over here. So we less 2, and then we also continue lessing the 5% hard hurdle rate that we've been given. And the 5% hard hurdle rate is going to be based on the beginning value. So less 5 over 100. So this I can open a bracket times 100 like that. So we can now close the brackets like that. If you wish, I can put this in braces like that. I think that would be better like that. So that now we can be able to get 20% the incentive fee there. How much do we get there? So it is 125.75 minus 100 is 25.75 minus 2 million like that. Then minus, we open the brackets, 5 million, because this looks like 5% of 100 looks like 5 million, minus 5. Minus 5 there. So we're getting 18.75. So 18.75, we need to get 20% of that. So 20 over 100 times 18.75. How much do we get as the incentive fee? So times 0.2, we get 3.75 million. And now once you have the 3.75, what we need to do is that the total fees is going to be this plus that value there. So we can over on this other side here. Looks like 5.75 million without even using the calculator. So we have total fees is given as 2, which you're seeing over here. I can indicate it with another marker here. So this is the fee, that one, and plus that one there in fees like that. Rather, not that one, sorry, pardon me, it's this one here. Yes, like that. So it's 2 million plus 3.75, 2 plus 3.75, you get 5.75 million. That's the total fees. Now, once you have the total fees, we can be able to determine the ending value. So, ending value, yes, we had initially been given 125.75 at the end of year 1, but we need to net the fees there. So, it's 125.75 minus these total fees, 5.75, you get 120 million. So, the return is given as wealth at the end minus wealth at the beginning over wealth at the beginning. So these are subscripts, please. Please note these are subscripts, like that. So the ending value minus the beginning value over the beginning value. That's what we're saying. So what happens is this. The ending value is this one, net of fees. So we are saying it is 120 million minus the beginning value, which had been given as 100 million. So minus 100 over 100 there. So this is 20 over 100. That looks like 20 over 100, which you're saying is 0.2, 20%. Yes, we're saying it's 20%. So it's the same as 20%, or 0.2 in form of a decimal like that. That is the return at the end of the first year. Let's look at the end of the second year, this year. So I'll just wrap this part right here, and these computations right over here. So we have been told, or recall, the wealth at the end minus wealth at the beginning over wealth at the beginning. The wealth at the end of the first period, 120 million, becomes the value at the beginning of the second period. So this is supposed to be year 2. So the management fee, this 120, because it was the ending value in the previous period, becomes, in the next period, becomes the beginning value. So we have 120, or rather 2%, pardon me, 2% multiplied by 120. So this 120 was from the previous period. And over there, how much do we get as the management fee? 0.02 times 120 is 2.4. As we said, put it in a star so that when you're getting the total fees, we put it a star like that, like the way we had done it in our previous year 1. Then now we come and compute the incentive fee. The incentive fee is based on the end of year 2 value, the ending value. And you're saying the end of year 2 is 127.4. So we get 20% times, we put it in braces like that, 127.4. We less the beginning value, which you're saying is 120. Then we less the fees, which you're saying is 2.4, like that. Then we less, now what you're saying is the hurdle rate. The hurdle rate is the minimum required return that the fund must achieve before any distribution of any distribution of returns is done towards the managers or the portfolio managers there. So we're saying is, we put brackets over there, 5% multiplied by the beginning value of 120, like that. Then you put the braces like that. How much do we get there? So it's 127.4 minus 120 minus 2.4 minus, open the brackets, 0.05 times 120. We're getting minus 1. Minus 1. So we're saying we have 20 over 100 times minus 1. So we are saying it's minus 0.2. Looks like that, yes. So what happens is that there is not going to be any form of incentive fee that is going to be computed over here. The only fee that they're going to take over here is the management fee, like that. So what we're going to do is that on this other side right here, the total fees over here is only going to be 2.4 like that. The ending value, you get the ending figure, which you're saying is 127.4 right there. So it's 127.4 like that. You minus 2.4. Now how much do we get? 127.4 minus 2.4 is 125. The return we are saying is going to be whether the end, whether the beginning, like that. So what we're just going to do here, we're just going to amend this. Whether the ending value is 125 minus the beginning value, which you're saying is 120 over 120. That how much return do we get? It's 125 minus 120 divided by 120. We're getting is 0.04, or we're saying is 4.16%.